Hi, it's Stan Reinford, and welcome to this week's market update. Today's December 17th. One more week till Christmas. We really have 2 more weeks till the end of the year. Hard to believe that we're there already. So let me jump into it. Again, thank you so much for the great compliments, the great feedback, and the great questions. So let's jump into how the chart works because I still have questions. Plus, we have a lot of new people that are joining this week. So we have in the three boxes at the top here to the left is the 30-year Treasury, and that's what the screen that we're looking at here. In the center, we have the 10-year Treasury, and then to the far right here, we have the S&P. So the candlesticks below, the higher we are in this chart, lower rates are. The lower we are, rates are higher. So it's the inverse. You look all the way over to the right here, we're green. So a green candlestick means that rates actually went down a little bit or stayed the same. Today, we're kind of going sideways. Red means that they're going up or they're staying sideways. So let me kind of jump into the news of what's happening. Last week, the Fed met. The Fed reduced the Fed funds rate by a quarter point, and it's been just okay going along here. But the news that's coming out is slowly starting to gain some traction. So Chairman Powell actually went out of his way to mention that the BLS is overstating job growth by approximately 60,000 jobs per month, which is a big number. And that's what everyone behind the scenes, economic-wise, was saying, that there's no way that those numbers could be reflected as to what they really were. Powell also mentioned that inflation is declining. One of those numbers that's in there, which is a huge part of the inflation number, is owner's equivalent rent, which is a phone survey. Really, someone calls your home and says, hey, how much do you think you could rent your house unfurnished and without utilities? How many people really know that? I'm in this business and I don't know that I can tell you. I know what I need to break even, and that's probably the number, but is that the real number? And that's one of the things that they're trying to change. The Fed also announced that they already started buying $40 billion worth of treasuries, short-term treasuries each month. Now, this doesn't necessarily help mortgage rates. However, Treasury Secretary Scott Bessent is supposed to be looking into ways to leverage this, that it could ultimately work out that they could be using or doing something else that could reduce those rates. So we'll have to see. The Fed, they are more divided than they've ever been. If you just look at what's happening out there, the difference between all of them, whether they're hawkish or dovish. So let's jump into jobs. So there were the BLS numbers came out the other day. There were 983,000 full-time job losses and 1 million part-time job gains. That's a big number. And what it says is that there's those part-time jobs are not jobs that are going to be sustaining out there. How many people would have to work multiple jobs to earn what they were earning full-time? So government sectors actually shed jobs, and the one sector that actually added jobs was healthcare. So which Kevin is going to be the next Fed chair? You have Kevin Hassett or Kevin Warsh. The one that is supposed to be a shoe-in is Kevin Hassett. So we'll have to wait, but that's who they believe that it's going to be. So let's talk interest rates. Interest rates right now are holding their own. If you're purchasing and you're putting a larger down payment down, you're probably in the low to mid sixes. And depending on if you buy down that rate or not, you might be touching the upper fives. Government loans are usually just a little bit lower in interest rate, especially the FHA and the VA loans. If someone has, a few bumps or bruises on their credit report and maybe putting a little bit less down, they might be up closer to that 6.5 and maybe a little bit higher. If someone's looking at refinancing, especially taking cash out, they're going to be in that upper 6 range, unless they're looking at buying down the rate and things like that. But that's not always the best thing. As I've mentioned before, just because you have the lowest rate doesn't mean you have the lowest cost over time loan. So keep that in mind. Most of all, I have really one more of these this year, but most of all, I want to wish everyone a Merry Christmas, and again say thank you for all the thoughts and all the suggestions, and also for being my clients, and then also referring me out. I really, really appreciate that. Have a great week. Enjoy, and I will talk to you soon.